Welcome to the Risk Group March Angel Club Luncheon. I'm pleased to have Bill Taylor and Dara Albright as our guests today. And our goal is to get an update on the Reddit situation. And Dara and Bill, thank you for being with us again this time for an encore performance. And Dara, I guess I'll turn it to you and have you go ahead and fill us in on an update of what's happened. And for those of you that will be listening to this recording, maybe give them a thumbnail sketch of what we covered in our last Angel Club meeting.
Sure. So it's actually perfect because in the first one that we had, we talked about what we call the Reddit rebellion, the situation, or sometimes I call it meme stock mayhem on Wall Street, where we had a bunch of retail investors in a chat room talking up stocks that had significantly abnormal or implausible, you could even say, short interest positions, most notably a company called GameStop, and ran up the stock. The shorts got squeezed, and that ended with some hedge funds suffering, billions in losses, needing bailouts. Although, interestingly enough, at the hearing, they didn't call them bailouts; they referred to them as investment, which I thought was kind of amusing. But that's basically the story, and that just kind of spiraled into really, a huge story. What does this mean? What does this mean for retail investors? What does this mean for institutions? Is this, people talking about, is this the renaissance of the retail investor revolting because of, tremendous amount of unfairness in the markets? Are they trying to make a statement? Really, what's going on? And so we sort of talked about this the last time, and what transpired since then, actually the day when we had that call was the day that they started the hearings on Capitol Hill, the GameStop hearing. So it turned out to be a 5-hour plus hearing. And, in case you didn't really want to sit through 5+ hours of listening to Capitol Hill testimony on this, Bill and I could sum it all up for you during this session right now.
Thank you. Please do.
So, Bill, you want to weigh in on anything? Should we start arguing, or what do you want to do?
No, fill us in on the hearing. What did the hearing accomplish, if anything?
Nothing.
Yeah.
Like any other hearing, it's
right.
a showcase for the political people to get their 5 minutes of comments in. And no matter what you think, they're really not talking about anything that will help or do anything. Somebody will come on and ask, the dumb questions of, okay, we've had GameStop and we've had all of this going on, and what has Robinhood done about diversity? What is this about this? What about that? So they're making their political points, and at the end of the day, it's an excuse to have a hearing to get everybody's agenda out there. Nothing is going to change in here. The only thing that will change, and I will say that there is unintended consequences on this. So while everybody is looking at Robinhood, for example, they're the whipping company right now to take on that. They are going to take, their reputation is damaged, and if anybody's bothered to look in the last few weeks or a month, Robinhood has a whole bunch of competitors now. There's one that just got on E something. I'm blanking a little bit, but they just did a big SPAC, special purpose, corporation, and they raised several $1 billion to compete against Robinhood. There's public out there. All of these other ones are going to start nipping away at Robinhood. And so what you have is a lot of investors in Robinhood are now going to start getting hurt or going to other things. So there's a lot of other ancillary things going on that you don't know. We all look at GameStop. Okay, so the media, everybody else, GameStop, GameStop, GameStop. It goes up, up, up. So now everybody sees that happen and they start flocking to other potential companies that might get squeezed.
Sure.
Okay. And it filters down. There might be one, there was AMC. Then it starts filtering down again, and people are going to start jumping into a lot of stocks for the quick buck, and a lot of them aren't going to get that pop. And so you're going to have a lot of people in a bunch of, dare I say, crappy stocks that aren't going to get the same squeeze, and they're going to be sitting there, and you're going to look back in about 6 months or a year, and you're going to look at a portfolio and say, why did I buy this? It didn't go up like GameStop. What's the deal? They're not getting the publicity. So all these other things are being shaken out, and the unintended consequences are it's just creating a whole new group of investors looking for the next GameStop, and they're not going to see it, and they're going to have a lot of disappointments 6 months from now. What happens if this is a big if? What if the market actually really goes down? Well, that's a shocking thing right there. But a lot of people are going to be trapped in a lot of stocks they thought were going to be GameStops.
Market won't go down. Market won't go down if all the millennials spend their stimulus money on the stock market. Where is Robinhood now as far as its valuation? What's it selling for today? Did anybody look or close?
Well, it's still private, so they're looking to IPO. And this is maybe yeah. But here's what is
Where's
interesting.
GameStop at? Where's GameStop at?
Yeah, I'm gonna look at GameStop right now. I think let's see.
It's what?
GameStop is right now trading at 206, and
just to like
kind of and put that into it's a $14 billion valuation, and to actually put that into perspective, when we had our call, a couple of weeks ago, GameStop was trading at about $42. $42, yeah, a share. And what I thought was very interesting.
I thought it went to like 386, didn't it? It's high.
It went all the way up to over 400,
right.
And then fell back down. And what I thought was very interesting, that at the hearing a couple of weeks ago, on the day that we had the call, because there were a couple of hearings. Now there's also a Senate hearing. The Senate held a hearing, and there was also another one yesterday I haven't watched yet. But the big one was the congressional hearing. That was the 5+ hour one. And they had the speakers, the witnesses that were testifying were the CEO of Robinhood. It was the head of Citadel Securities. They were the ones that bailed out the hedge fund that got caught in the short squeeze. And there was someone from, so Melvin Capital is a hedge fund. There was, Jennifer Schultz. She was the director of financial regulation at Cato Institute, which is a libertarian think tank. Then it was the CEO of Reddit. And then there was a gentleman by the name of Keith Gill, who is the retail investor, goes by the name Roaring Kitty on some of his screen names. And he was the guy that I guess you could say, or is allegedly, or they're accusing him of, the guy that really kind of started this whole thing for running up the GameStop price. Keith Gill, just to give you a little background on him, what we learned at the hearing, his father was a truck driver. His mother was a nurse. He, grew up humble beginnings. He's self-made. He taught himself, to trade. He did this all on his own. He was not looking to run up stocks for personal gain. I mean, he was just in chat rooms he has, he's just vocal about it. He has his own, YouTube channel. He talks about stocks that he likes. But everything, he wasn't talking anything about insider information. He's not privy to insider information. He's just a regular retail investor. And, what I thought was really unfair was, following the hearing, he also then later went and I guess had gotten a FINRA license. So he's also licensed and now in the business. The first thing that happened following the hearing was Keith Gill's FINRA license gets taken away. And he's sitting here, nothing being done about shorting abuses, naked shorting, the fact that you could have 140% of a stock being shorted, which is implausible. And, Bill is right. As Bill said, all of this is political talking points. Nothing gets done.
What would you have liked to have gotten done? But what should have they done, if anything?
So if I had like my wish list,
Sure.
my wish list.
You're in charge. You're now in charge.
My wish list would basically be, it would be a couple of things. It would be, we're going to do away with the accredited investor rule. It's completely unconstitutional. We had no business giving unfettered access to investment products to one class of individuals while restricting them from another. It's completely unconstitutional, needs to be done with, needs to be gone. That's number one. We need to really figure out how these shorting abuses occurred. I mean, what I would do is I would say we need to immediately, and they are researching it and looking into moving a lot of this to the blockchain for better reporting, and recording the shares. But they need to do more than just talk. They really need to act. But they'll talk till they're blue in the face, and they're talking that they're going to get it done, and that's what they're looking into blockchain, and they're looking into this, but nothing's getting done. Immediately, they could easily go back to the uptick rule. That would be at least helpful. It worked, for years and years and years. There was no reason to go to the alternative uptick rule that they did. So there are things that they could do immediately to bring fairness to the markets, and instead it was, let's blame. What they really focused on and harped on was two things. They wanted one. They focused on Robinhood's payment for order flow model, which is the model that actually gave retail investors an opportunity to trade commission free. When I started in the business 30 years ago, I mean, you would trade hundreds and hundreds of dollars, and commissions were expensive.
Mm-hmm.
Now we're down to zero. That is a good thing for retail investors. And, they want to harp on that. Why don't you ask a retail investor if he would rather, would he rather pay the commission, or does he like the payment for order flow model? They're the ones, the regulators or the legislators are trying to protect from this payment from order flow model. Just ask the retail investor which they would prefer. That's number one. And the second one was, another suggestion was, let's implement a financial transaction tax. So we'll stop, a lot of the day trading or, high frequency trading or, frequent trading, whatever. What is that going to solve? That's only going to come down and hurt the retail investor even more, and that's going to hurt the markets. It's going to hurt the economy. So, I mean, none of those are real viable solutions. Those are just political talking points, in my opinion.
Dara, thank you for that. Bill, what questions of Dara before I make Bill king for a day?
I think some of the things they could do immediately is just enforce or make firms comply with what's already out there. Dara's right. You can't short more than the outstanding shares. End of story. Enforce it.
I have to agree.
So it's difficult. You just say, look, you can't short more than the outstanding shares. I mean, it's simple there. In the case of Robinhood, it doesn't matter if they're paying, pay for order flow or whatever. They have a compliance issue. They have an issue. they're letting people trade because the only way the payment for order flow pays for that, or the non-commission, is to get a critical mass. The more people that they get to trade, the more they make. It's as simple as that. So who's doing the compliance? If I was sitting at Robinhood and I saw that we're opening accounts, 10,000 accounts a day, 5,000, whatever the case may be, nobody checking the boxes to see if those are people that should be trading that or whatever. And, you know, you can make the case, Dara will make the case, I'm sure, that everybody should be able to trade whatever they want anytime.
Sure.
Yes.
So, well, again, that's why she's wrong and I'm right all the time. So we know that. But that being said, nobody checking to see if they're suitable, their suitability. How long does it take to open an account at Robinhood? Is anybody looking to see if these are qualified people? Are they going to get hurt? Everybody's happy when they make money. Nobody's happy when they lose. And so there are rules in effect right now. Just comply with them.
Might I add something here?
Please.
Sure.
I've been in this business 40 years. I trade every day, futures primarily, but I've seen squeezes come and go. And the moral of the story is, it's not nice to fool Mother Nature. Mother Nature being the big boys in the markets. And when you get an edge, they don't like that. Like going into the casino, if you're a card counter and know how to do it right, you got to leave.
Right.
So I don't. But on the other hand, these non-accredited investors, if you want to call them that, these novices, I don't have a lot of sympathy for them, because there again, it goes back to, if you want to play with the big boys, you're going to have to get spanked. And you know, everybody wants to make everybody a victim in this. But I don't believe that. I believe if you man enough and woman enough to stand up and do it, you know, you take your own chances and you learn from it. But high frequency trading ought to be illegal. They sell an order flow so that those high frequency traders can read your orders. They know where they are. They can front run them. They can hit them to make the market go. There's a lot of stuff they can do. And it's a scam, and they make millions of dollars a day, some of these companies, and they do it at the expense of the traders, of the investors. So you know, nothing's sacred out there, but you got to realize you're playing in a stacked deck, and I don't think it'll ever change.
Can you guys explain how Robinhood makes the majority of its money, the 80% of the money that it makes? How does that work?
It is through the payment for order flow model. So essentially, they have a deal with Citadel they have a deal with a couple of different brokers that they use to facilitate the transactions. But the main one that they use, I think Citadel just is the bulk of their business. So basically, they give Citadel the business to. And by the way, let me just backtrack for a second. The reason why Citadel's business had boomed, and the reason why that we're even in this position in the first place, was because the Dodd-Frank bill that passed really created a lot of opportunities for companies such as a Citadel to emerge, to facilitate these trades, instead of a firm like Robinhood going directly to the exchange. So there was a lot of rules and regulation, and that's just one aspect of it. And I know Bill will probably touch on a couple more in Dodd-Frank, but that was, and Dodd-Frank also had restrictions in there for capital requirements, which, when you look at why Robinhood had to stop or prohibit some of their investors or their clientele, not from trading altogether, but just from purchasing, allowing them to sell their stock, not allowing them to purchase, that was because of restrictions that were put in place because of Dodd-Frank. So when we have to really kind of go back and look at why this has all happened. But now go, back to your question, just how that works. So because of that, Robinhood will go and then work through Citadel Security, give them the business to facilitate those transactions. And then, and all those commissions they're free. They're not charging their clientele any commissions. And they're getting paid, right. Robinhood's not charging their retail clients, so they're trading commission free. But how Robinhood is getting paid, and the bulk of their revenue, and it is 80+% is getting paid from companies, like most of it will be Citadel, but basically like, they're paying them for that order flow business.
Sure.
For those orders.
They're like a commission agent. Robinhood's a commission agent of Citadel, if you will.
Right. Robinhood is then becomes right. Exactly.
Okay.
Another way another way Robinhood and any brokerage firm gets paid is also being able to loan out their stock to people who want to be
Great
short.
point. Right.
And so, if you look at a screen or you're looking at something that's actively traded, and by the way, I do not like the high frequency trading. I don't like it. I think the public gets ripped off on that. They can say it's going to be a better fill, blah, blah, blah. You go in and you put a bid in. Let's just use for an example. You have a $10 stock. It's, I want to pay 10. Immediately, somebody will come in and there'll be $10.01. Okay, you go to $10.02. Immediately, then it goes in $10.03. So it's forcing you to pay up, and you pay for that order flow to see that, and those pennies add up. If you do huge volume, so they're making money on the pay for order flow. I get that, how to do it. But the other thing is, it's to every brokerage firm's advantage to lend out that stock. And I don't think they look real deeply, but if they're loaning out more than the shares out there, it's to their benefit. So you can only, there's 100 million shares out, but if I can lend out 200 million, I'm making a lot of money because people pay for that.
Right.
There's a lot of firms in the crypto world now and the Bitcoin and stuff like that they loan out Bitcoin and the others to people who want to be short, and they're getting, they farm it out, but they're returning some of those 90% of the profits to their clients. And so it's actually a better deal and fair, but the Robinhoods and the others, why wouldn't I want to lend out 120, 130, 140%? Because people are paying for that. So there's a multiple of things that were really not divulged in the hearings. They didn't look deep enough. They looked, right under the first layer of the onion, and we're going to make a case out of that. And end of story. We all got our points, and we'll move on to the next media story. So
and yeah, just to even put a finer point on that, as Bill said, just to give you an idea of the type of returns that the broker dealers are getting for lending out these stocks, GameStop was getting, upwards 25 to 30%. That's, a significant return. When was the last time your savings account gave you 25 to 30%? Per annum. So, and as Bill also alluded to, what we see in, that's why, when we talk about DeFi or decentralized finance, we're seeing that this happening already in the DeFi world. We're seeing retail investors have the opportunity to lend out their digital assets just the same way that a broker dealer lends out, stock, in very same way, except the difference is in the DeFi model, that percentage, that 25 to 30% or whatever the going rate is for that particular, asset or security, goes back to the actual person that owns it and is lending it out, not the middleman or the broker dealer. So I kind of look at it as, we're going to start to see some of these DeFi protocols seep into the traditional markets at some point. Obviously the big guys are going to do everything they can to stop it, but eventually it's going to be unstoppable.
I agree with that too. And I also agree with the previous comment that everybody should be allowed to go in and trade, what to do here and there. High frequency trading, I'm not a big fan of it, never have been. I think it's a very disadvantage to any trader out there to compete against that. But on the other hand, you know, you make a good point. It's gambling. So if you want to go in and gamble and you go to Vegas, you walk in and you can take your chances. But take a look at the building. The big building with the pretty bright lights and all the stuff like that, you're not going to beat them. It's pretty obvious. The ones with the big bright lights and everything else is there. So they created a gambling mecca and getting paid for it. So you're talking about if you want to make change, you're going to have to restructure a whole thinking and everything else on this. And how people should everybody be allowed to play fair? Well, it's never going to happen. It just never will. You can put a plug on something, and somebody will find a way around it, you know, in a short period of time. It's just the way it works. So, and you have a psyche. So what this has done is actually taken the investing part or the speculation part and made it more of a casino and a gambling part. And there's distinct lines between investing and speculating and gambling. You know, I go in and I see a little stock or something I want to do and something like that, and I'm going to hold it. That's a speculation. I buy a $2 stock, it's a speculation. If I go in and I want to invest in something, I look for yield, I look for this and that, I look for other things in there. I want to gamble. I want something that moves up and down really fast and be in and out 20 times a day. And I've been there and done that. And I'll be the person to say I was gambling at the time. But you know, on the trading floors, that's what they do, except they call it providing liquidity. So the more you trade, the more liquidity. But anyway, so you're talking three different things. So they have created a gambling mecca, and ironically, apparently, the government's sending you money to gamble. With all the checks that go on. I'd like, I've gotten a check. I'd like to play. Nobody sends me a check.
Do I understand you correctly when you say that Robinhood now has a lot of competitors?
Yep.
That is going to shift the investment a mix significantly? Because I assume that they're going to have the same a broker-dealer model that Robinhood has. Will that have a major impact? Can you share that with me?
I think it will, but it's going to take time to shake out. The one thing that Robinhood has is brand name recognition, and that's a plus and a minus because, you know, when you're the big brand out there, you can take pot shots at it. But Robinhood has the flaws have been pointed out. And so they're vulnerable to competition. And these people have to have a big name. There's a company that's up already called Public, and it's backed by a lot of VC firms here and there. Will Smith is behind it, a bunch of others. They got a bunch of things in there. And their model is, which I like it, but I don't think they're going to make it. They don't charge commission, but rather you can tip the broker.
Oh,
so if you get a good fill, you can get a tip.
The restaurant model, interesting.
Yeah, I'm not quite sure that's a good model, but
right.
Different.
But Michael Bolton thinks it's a good model.
Huh?
Michael Bolton thinks it's a good model.
Michael Bolton loves it. Yeah. But then the other thing, there was one I have not pulled it up. If you take a journal or you take something which I haven't seen today, but literally in the last day or two, there's a competitor Robinhood called E something, small E something. I'm just, it's not here. And they just went public with a SPAC, with a special purpose vehicle, and they raised billions. So they're going to start marketing, advertising. I don't know their model, but there's a couple of others out there that are now, nobody paid any attention. They're going to pay attention to that. And they're going to pick up on the flaws that Robinhood had, and they're going to improve upon. Will they still send their order flow and pay for order flow? I don't know. Haven't seen the model, how they will tighten up. But Dara makes a very good point. If you're going to open an account, are you going to open an account with a firm, and the first thing you're going to ask, do you pay for order flow?
Right.
No way. You go out and get on an airplane. Everybody jumps up and down. You want to fly somewhere. What's your first question? Is that a 737 MAX? No. I'm going to get out of the
You know,
airplane.
it's the pilot sober. That's
Right.
my first question. You know,
And then you get upset. Oh, I arrived at my destination. And, oh my God, I didn't know I was on a 737 MAX.
yeah.
You care?
Well, I got to believe if for the mass and the public, they're going to go with the Robin Hoods of the world versus that may have an impact on the standard brokerage. That's my real question.
Yeah, no, and it has, because if you look at it, you know, what had transpired following Robinhood's model. I mean, they're an innovator in the space. It was, you know, they came up with that model, and then look who followed it. TD Ameritrade, Schwab,
Sure.
Fidelity, you know, they're all going down to commission-free trading. So, you know, it was, you know, fintech that came in and innovations in fintech that led the way here. And that's where it's all going. Everything's going to commission free because, you know, that everything's going to decentralized finance. So,
But does does that mean, Dara, when you say commission free, that the standard brokers are going to get a Robinhood to front end them, or they're going to do both? Does that mean they're going to be more citadels, or how's that going to me? That's dramatic impact to the marketplace, and that's what I'm trying to understand.
I think that's a great question. I think if you're looking at two different worlds right now, but eventually they're gonna merge. But you know, right now you're looking at the conventional, let's call it analog finance, and you know that's the conventional markets that we all know, stocks, bonds, etc. And then there's you know, the digital markets and decentralized markets, and that's what we're seeing happening in the crypto world, in the crypto space. And you know, in the decentralized world, yeah, I think that you're not going to need a middleman at all. So, you know, what's going to happen once those, you know, two worlds sort of start to merge and combine? You know, maybe that we get to a point where brokers become obsolete.
Dr. Wood, you're quiet. I know you trade. Of course, Dr. Wood, on all his private equity investment, gets Dara the 20 to 25%. Now, unfortunately, in that marketplace, we got to wait 15 years, but with no liquidity. But other than that, I mean, 20% is 20%. It's time that's the real difference. But anyway, all kidding aside, Dr. Wood, weigh in on this, if you will.
Well, the one question that I wonder is, I'm seeing 10-year bond rates zooming way up. I see the 30-year bond rate creeping up. Usually that means something bad for the stock market, especially an overall market that's really in a bubble. What happens on these Robinhood trades on days where you have a market, like a major market drop? You know, so many of we're hitting all-time highs, so I don't know that we have much data on that, but I would just wonder, would the Robinhooders all bail and just, you know, say AMC's at say $14, and all of a sudden it's $2? I mean, has anyone seen what happens on a bad day in a major market?
Well, I think the closest we've experienced to that on the downside was this past spring with COVID. And at that time, Robinhood, you know, got themselves into a little bit of a bind because Robinhood's systems, there was a glitch. Their systems went down with so much activity of people, you know, coming into the market. You know, I think personally, if you just look at sort of the psychology of the typical Robinhood investor, is probably more the younger side, millennial. You know, it's someone who has not lived through these different market cycles. Probably has not traded. You know, they definitely have not seen, you know, the .com, bubble burst in 2000, and maybe they remember their parents experiencing the financial meltdown in 2008. But I think they come with a very different psychology with them that they bring, and I think you have to kind of look at the way they think, the way they see the world, and we haven't really seen much other than really for them, the COVID impact, which for them turned into a buying opportunity. Look, that could also be an anomaly. 2008, the financial meltdown, the crisis was actually caused by finance. It was caused by banks. It was caused by financial institutions. This was a crisis that was caused by something completely outside of finance. So, maybe the mindset was also different, that, okay, this is a buying opportunity. But I think for right now, I think for right now, it's going to be a bull streak until we really see that there's, there really is no sustainability, right? There's nothing to sustain these markets. There is, a massive crash and maybe a bull run, a bear drop for a while, bear market for a while, and maybe that'll change it. They'll wake up and they'll say, no, I'm leaving again. Retail will depart from the market again, like they did in 2008. But I don't think we're there yet, psychologically. That's just my opinion.
Dr. Wood.
One thing I might say for everyone, look at, there's something called the SLR. It is a Bank of International Settlements rule that banks would have 3% of reserves for stressing have problems. And our Fed has allowed, since a year ago for the COVID drop, the banks to avoid this rule. And the banks now have about 5%, have the ratio of 5%. And that is supposed to expire at the end of this month. And where the problem comes is that the banks have done very poor in lending, and they've invested most of their money in treasuries. And they have 5% that has to go to 2%. And it comes out to be about $76 billion worth of treasuries that would need to be sold if the rule is not extended, or the exemption is not extended at the end of the month. So that would cause the dollar to go way down. It would cause interest rates to go way up. It would cause the yields to go way up. It could have a big market reaction. So things like that could be on the horizon. If Powell, we were listening yesterday, and he didn't even mention it. But if it wouldn't be extended and the rule would be enforced, we might have on the 31st of March a big market drop or thereafter. So I'm just wondering if all these people that are riding high and they all get their capital wiped out. I mean, that's a huge amount of money, and these people they're players. They're not investors.
Yeah, I'm going to look into that. That actually sounds interesting. I think, everything that you were saying, I mean, how are they going to perceive it? They might look at it and say, hey, this is another buying opportunity, and come in droves again, even though the market is completely, it is really a bubble. I mean, what is it basically, what's keeping it up? I mean, it's not profits if businesses are closed. I think that'll be certainly interesting to watch, but that's also why I think that it makes it even more essential that people are diversified in their portfolio within crypto. You have to have exposure. You have to have Bitcoin and all of these things. Everything. Every time I hear about, quantitative easing, all these shenanigans that ways that the government can manipulate the markets, the more the more confident I am or the more excited I get just about the opportunities in crypto with Bitcoin, Ethereum, Chainlink, companies like that.
Let me.
What I would say is everybody look up Ray Dalio. He just came out with an alert to his fund people and in his report, and said that he's expecting draconian tax involvement with the Democrats, including exchange control, maybe even confiscation of gold, and delegitimizing Bitcoin. So you might look up for Ray Dalio what he just said.
Weighing in on Ray Dalio, he hasn't had the hot hand for a while, so he's talking different things. On the other hand, apparently we've snuck into the bad thing we've thought about all along, the old MMT, modern monetary theory, where we can just print money left and right, and that will hold everything up. Well, that's not going to, you just don't know when. And I agree with some of the bearish talk, but really, Dr. Wood, you have to realize the markets never go down again. This is the new deal. And I'm saying that facetiously, for someone who basically is a walking bear for most of my life. Because if you trade options, you sell options, and you get the time on your side. But I'm stunned with this, and we all know it's going to end badly. Will it end badly for a lot of Robinhood people? Yeah, because you're going on 12 years now, and they've never seen a consistent bear market. It's buy the dip, buy the dip, buy the dip. Well, right. Sometimes those dips don't work. And they haven't seen that yet. And when they experience that, it's going to get really ugly. But when? It certainly wasn't last year. It certainly wasn't last week and 2 years ago. But I totally agree with you. There's going to be some really bad stuff. And what does the government do about it? Yeah, they've been known to confiscate gold. I don't think they can do much with Bitcoin and stuff because it's around, I don't think they can control it. They can say, oh, you can't do it here, but you can easily do it offshore and around the world easily. And so, anyway, I disagree with Dalio on that part.
And also, there's crazy talk about, okay, let the government taxing unrealized gains, which is, I mean, it doesn't even make sense. And there's it wouldn't even work, there's no way that they could even possibly make that work. I mean, that's actually a confiscation of wealth. I think we would see a civil war, or more likely a new revolutionary war, if they go in that path. But
has anybody thought about the fact that if they put on a wealth tax and you assume that the stock market or the equity market or real estate market is going to appreciate at 5% a year, 10%, pick a number. They can make up anything.
Right.
They're going to tax that wealth. That's fine. And when you tax the wealth, they're going to build in programs based upon that income. What happens when those assets, whether it be stocks, real estate, anything else, go down?
Right.
And you built in all these programs based upon your assumptions that we're going to continue climbing. What happens then?
So, it's ridiculous. And it was very interesting. I actually saw these numbers. I was kind of toying with them because I wanted to, I was thinking about putting an article out on it, but talking about the wealth tax. Okay. Did you know that under, let's say, the one that Elizabeth Warren proposed, okay, in 2020, let's say her wealth tax was implemented, the combined revenue that the government would receive Do you know what it is? Want to know what the wealth tax would have yielded the government? Take a guess.
I'm afraid to say no to you.
No, just take a
It's
guess.
not,
Take a guess. All the, the wealth tax, also all the richest,
Zero.
no, the government would have gotten 114 billion in 2020. Okay. That's nothing. What is that? That's, that's what, like a half hour, I mean, what does that pay for? If the whole thing is so unsustainable, the whole thing is so ridiculous now. I actually think, and I want to just throw one other thing into the mix here, but not from a bearish perspective. It'll bring a little bit more optimism back to the conversation. But interestingly, I started studying the last 100 years of the markets, and I was trying to find was there a catalyst that because there's something that we could point to outside of basically fiscal policy, monetary policy, et cetera, but just really kind of talking about, well, is there some kind of catalyst outside of that we could point to that has inspired periods of stock market growth, economic prosperity, et cetera. And I believe that there is. And I believe that that catalyst is invention in mass media, mass communications. So if you look at the past 100 years, you look at the radio inspired the Roaring '20s in 1920, as when the radio first hit the scene. Then it was television in the 1950s, one of the longest bull runs in history. Internet in the 1990s. And social media, I think that, we're kind of seeing that now. But I think blockchain and media coming together will be unlike anything we've ever witnessed before. And that could be a huge, huge game changer. And if you look at, all of these periods, and it's very, very interesting, if you look back at what caused the 29 crash, why did it all, basically why I point to and new invention in mass communications, because it all came down to a new medium by which brands could engage consumers. And when consumers are engaged, they're spending. When they're spending and they're buying products, production is going up, revenues are increasing, jobs are, are being created, et cetera. I mean, it's a whole domino effect. So, 20s, I mean, before the radio was the first thing. There's a little box of sound sitting in people's living rooms that told them what they could be buying. And, we've never seen anything like that before. It was, the biggest period of consumerism, in our history. So I think that, I think that there's reason for optimism just because of innovation in that area. And I think we'll see a lot of that. And if you look at, what caused these crashes, the 29 crash, although the SEC emerged as a result of it and came out and basically went and said, it's all about fraud. We have to, eliminate fraud, these fraudsters. There was nothing about fraud. The reason why the market crashed in 1929 was because it was a total bubble. People were buying these new products that they were hearing on the radio, for on 80% installment credit. And then they were buying stocks from the companies that made those companies on 10% margin, right? It was a bubble waiting to burst. So, I think that scares me more, but I think that, I think innovation will bring us back, just like it's consistently done.
that's an interesting perspective. Thank you. That was good.
Yes, and what I want to do is transition to Roy, who's had an opportunity to visit with our state capitol, his wife being a senator. But before I do that, Roy, and I hope you can hang in with us for a few more minutes here to do that. He was on a tight schedule. But before we go there, let's take and go for a final round on this topic with Dara and see if there's anything that you haven't asked. Now's the time to do it. And then I'll ask for final comments from Dara and Bill. Is that fair? So, Robert or Mills or Jim, if there's anything you want to say, let's ask Dara now, if you will.
That's not coming in clear.
Who is talking?
I think there's somebody on the phone that's trying to ask a question, but it's not clear. So let's go ahead. Mills, any final comments or thoughts from you before we move on?
Well, Dara, I assume you're still involved in the on the crowdfunding and all of that, right?
Yep.
Okay. Well, there's been some changes as of 3 days ago and all that good stuff.
Big changes. Yeah.
That's the other hat I wear is on the investment banking crowdfunding side. And
can you brief us on those quickly, Mills?
Well, yeah. As of the 3 days ago, the upper limits on the Reg C was increased from 1.07 million to 5 million, and the Reg A Plus went from 50 million to 75 million.
Okay.
Maximum raise. But I'm focused now on the cannabis industry real strong here, and there's a tremendous, and when I say cannabis, my focus, though I'm a part of a big medical cannabis group here in South Georgia, my focus is on the industrial hemp side. There's a huge industry to be created from scratch there on the industrial hemp. So I'm putting together an effort to build processing facilities in Southwest Georgia. I've got 5 locations identified and under negotiation with the property owners, and I will be crowdfunding those. So that being said, that's all I got to say about that. Forrest Gump.
Are you doing a Reg CF for that?
I'm going to do a Reg D Rule 506C on the holding company, and then the subsidiaries will be Reg CFs.
That's awesome. Yeah, I'd love to hear more about that.
Okay, that's all I got.
Robert Horn, anything from you?
No, I'm very interested in this subject, but I'm learning more than contributing at the moment.
Okay. Dr. Wood, any final thoughts from you?
No, I'm fine. I've enjoyed what Dara's and Bill has said. It's thank you very much.
Okay, I'll turn it back to Dara and Bill to wrap us up, if you will.
I left one thing out. One thing out on the revenue models when we talked about Robinhood or all the others in the big firms and how they make money with zero commissions. Obviously, they loan stock out too, but the other thing they make a lot of money on, which is a really big thing, is on margin money and loaning money out to borrowings. I had a real good friend back in Chicago a long time ago at a clearing firm, Dave Goldberg. And after the '87 crash, Dave Goldberg, he realized that all they were the clearing firms were a bank, and he had a bunch of idiots running around the trading floor with blank checks. And so he actually sold the clearing firm and opened a bank because they have risk controls in there. So again, if you look at your margin thing, it's the benefit of Robinhood, all the firms to open margin accounts because they can loan. And the loan is not at 1% or 0.5%, they're loaning money out at big things. So there's a conflict of interest on that. They have zero commission, but you have pay for order flow. They're loaning the stocks out, maybe over 100% or whatever they're getting loan money on the stocks. And if you have a margin account, which you have to have to loan the stock out, they're also getting, they're loaning you money at exorbitant rates. So if you look at all those things, none of those are in the best interest of the consumer.
Right.
As it's been pointed out. So anyway, that's my last piece. I forgot to get in that before, but I'm thinking kind of slow today, so you got to bear with me. One thing
And
that can make the market go down, the one thing that nobody can see, what's the guy, Roaring Bunny, or what's his name now? I'm not pulling things up.
Roaring
so
Kitty.
fast. What if he comes out of the blue and say, I don't like the market through his social things, and I'm selling things. One guy you don't even know comes out and
Right.
makes a comment like that. That's a little frightening out there.
That's
It's
10.
a little scary.
That's 10 to the power of n that I worry
Yeah.
about. Back
Yeah.
to the power of the crowd made
Yeah, exactly.
possible by social media, and the
Exactly.
fact that we follow 10 people, and those 10 people follow 10 people, and those 10 people follow 10 people, and that can become a powerful force for good or evil, okay, unsubstantiated or fully vetted, which doesn't
Right.
happen. And to me,
True.
Dara, per our earlier conversation, that's totally outside the standard media that we're used to dealing with. That's the new,
Right.
to me, that's the new untapped force that is really impactful, that bothers and scares me because people don't recognize that. They think it's real. All right. I mean, it's by its real that the fighting cat can have that much power, or his brethren. So that bothers me a lot. I think that's a new influence in our marketplace. Dara, take us home on this
Yeah.
subject before I turn it over to Roy.
You know what? I would just say, I would echo what Bill had just said, and I would just add to that is, everything that you just said about the margin revenue is another reason and way that DeFi is going to democratize finance and bring justice back to the markets and fairness back to the retail investor. And I would just end on that note.
Good. Well, thanks to both Bill and Dara for sharing this. We were fortunate to record it. It will be made available to everybody. And you may want to stay with us. We'd love to have you. We're going to shift now to the state of Georgia and investment banking, and what the new rules and regulations can or should be going forward to impact private equity investing in Georgia. So with that, let me introduce Rory Robichaux to go ahead and fill us in, Roy, what you discovered.
Thanks a lot. I appreciate it, Larry. As some of you know, my wife is an elected legislator downtown under the Gold Dome, and she is a representative covering most of Roswell and a little part of Alpharetta. And so one of the committees she sits on is small business development. So I've been talking to her for a while about, talking with the chairman, talking through the committee in terms of some of the things we're doing and trying to do in the angel investment community and trying to build that community and things like that. And so finally she got his ear and he said, okay, bring me somebody to talk to the committee that's going to, enlighten the committee, enlighten the people that are on the committee in terms of the angel investment community, angel investing in general, and what it is. Because when a lot of people, and I'll put some of the legislators in that category, think of angel investing, they think of venture capitals. Again, they don't separate the two. And so we went there, and so she came and said, look, you got 15, maybe 20 minutes to talk. Who do you want to bring? So I went through a number of people and actually spoke with Paul Lopez. As many of you know, Paul, he's one of the co-founders of 1111 Ventures, as well as president of Thai Atlanta. So he checked a lot of boxes in terms of some of the things that we did. So this past Tuesday, he and I went down there. I was more a prop for him to use to say, see, we got an angel investor over here. And I talked for a few minutes. Mostly it was him talking about a little bit about enlightening them as to where angel investing fits, where the angel investment community fits, somewhere north of friends and family and somewhere south of private equity, venture capital, and talking with the niche that it provides. And then he went through a number of examples of some of the individual companies that he has in Thai, through Thai and others have invested in, went through some of the success stories, as well as some of the less than success stories. So again, helping them understand some of those sorts of things. And got into the investment tax credit that, as many of you know, was nice to have while it lasted, that expired about 2 years ago here in Georgia. And so he talked about how a similar but even more lucrative tax investment for angel investors does exist up in Maryland, and each year it's oversubscribed. So again, went into those sorts of things and talked about that a little. And the net takeaway that we wanted them to bring away from that discussion was, we said that, look, we will help you, but we want you to put together a study committee. We want you to work with us because you have your hands on a lot of information that we would like, information that we could use to help build and make this industry more robust, to help make Georgia a better destination than some of the others that are out there. So we agreed to work together to have those sorts of discussions. The session is ending in about 2 weeks on the 31st of this month. But the committees can continue to meet through the summer, fall, winter, if the committee chairman chooses to do so. So I'm going to be talking with them, as well as Paul, about seeing, can we put together something with some of the members of the committee to call it a subgroup, a task force, whatever they want to call it, so that we could start looking at what is it that we want from the state of Georgia? What can they do for us? What should we be asking from them? And what can we do together with things such as whether it's Thai Atlanta, whether it's the matching system that Larry White's put together, where we can match people who are looking for investments and people who have money to invest. So that's one of the main things. The chairman himself is from southern part of Georgia, in rural Georgia. So he was really interested in what we could do to facilitate or focus somewhat on investments in the non-urban parts of the state. And so we agreed to have those discussions as well. So again, it was a far-ranging discussion. And I guess one of the measures of success was the committee meeting we knew going in was an hour. We were one of three. We were hoping we would get out 20 minutes. We were figuring we'd get 10 to 15 minutes. We got the last 30 minutes, and at the end of the 30 minutes, the chairman was still asking us questions. So again, they were interested. That was the measure of success for me. And he came over and talked to us for a while after the meeting. So again, we both made a point of saying we wanted this to be the beginning of a discussion. We didn't want to come there and talk for 20 minutes and we go away. We wanted it to be the start of helping us to help them understand what angel investing is, what it can do for the state of Georgia. It's great that they throw tens of millions, if not hundreds of millions of dollars at particular industries, sometimes particular companies. But we all know the growth engine that these small companies are. So we need to continue to educate them. One of the things they had made a comment on previously, they didn't make it on Tuesday, but they had made it in public at some of the prior meetings, was that they let it expire because the angel investment tax credit wasn't being used. They had reduced it from a cap of $10 million to $5 million in the last 3 or 4 years that it was there, from like 15 to 18. And even that amount wasn't being used by the investment community. Now, I want to dive into that more, and I've asked them for some data in terms of what was being used and that sort of thing. So I want to actually get under it and find out if that is actually true. And if so, then we can kind of go backwards a little bit. But we're not going to spend a lot of time on looking backwards. We want to look forward and see what we need them to put in place, because there should be something in place to help angel investors and help the industry. What that is, I think we should have a hand in helping them structure that. So again, that needs to be part of the conversation.
How are you going to identify that, Roy? How are we going to I clearly think that we need to develop what we want list, or what would help angel investors. I assume that that list does not exist? That's my first question. Second question is, are we aware of what other states are doing that we could, that's always a great reference, so that we can copy, mirror, or be on a par. Obviously, I want to go beyond that, be better than. But do we have either one of those lists available to us, or do we have to compile both?
I think we probably need to compile it, but that is a place where I think the legislative body can help us there, because they have access to certain information. They can make phone calls and get information much more readily than we could as individuals. And in terms of what is out there, we actually use the example of Maryland in the discussions, at least Paul did. And the investment tax credit that existed here for 8 years was, if you put up monies in a small business, and I forget what the specific parameters were, but it was a 35% investment tax credit. The one that exists in Maryland today is 50%. So it gets oversubscribed each year they put it out there. Ours went away, so there is no angel investment tax credit there. But again, that's the baseline that I think the legislators would go from, what was there before, and it was a 35% tax credit.
Sure.
And is it typically just like, for an angel investment, like, is it a typical Reg D offering, or is it something that could be brought into the crowdfunding world? And now, given, now that retail investors are having access to act as angels and have that opportunity to participate?
Well, the whole crowdfunding thing is, as we all know, something that developed post or in the latter stages of, when the investment tax credit in Georgia was even in place. So that's some of the things we have to take into account here that weren't even part of the prior thing. What I can do is I can send it out to Larry and he can distribute it to everybody. Actually, the legislation that was there, that was actually in place previously. So at least we all know the baseline, because some of the members of that committee have been there for a long time. So that's what they're going to be thinking of. Even if we want to recommend we go in a very different direction, we at least have to know where they're coming from. So I'll get that to Larry and he can send it out to everybody.
Thank you, Roy, for that, for your efforts and for your wife's efforts. I think it's mandatory that we compile a list of what we need our state legislators to do, substantiated with what others are doing.
Yeah.
We've come a long way in crowdfunding. Start Engine is doing phenomenal stuff to include equity trading in the West Coast. So I'll be talking to Mills Rooks a little bit about that, and I know Dara's all involved with that. But I think we have to have a very definitive list that says, here's what we need to do as a state. We've got Invest Georgia that doesn't talk to Invest Atlanta. Okay, what are they doing other than a book of our ecosystem for the funds that they have, and where are they being deployed? So without that, I have, frankly, very little confidence that nothing will happen. Sort of like our previous conversation on the Security and Exchange Commission. That anything meaningful will happen. We'll have lots of great discussion. But
yeah,
nothing
it's interesting because a couple of years ago I had a really interesting meeting and discussion with the Invest Atlanta folks talking about using crowdfunding as a way for them to gauge different kinds of investments and maybe do matches, for local crowdfunding companies here, and use the Georgia crowdfunding exemption and rule, and I thought that was a really interesting way to go, because it would give the government even more of an opportunity to to greater returns, because they're seeing really what the crowd is gravitating towards.
Sure. And they've already pointed out, well, the chairman is from your area, Mills, so there may be an opportunity to, I think, really make hay of this. I truly applaud the opportunity. But
what's his name?
what's the chairman's name from?
I don't have it off the top of my head.
We'll
I
get to it.
wanted to remember that, but I don't remember.
I'm gonna.
He claims to come from a family of entrepreneurs. They had farms, they had production facilities, and also some real estate ventures. So he kind of rattled off a number of things that his family was involved in. So, you know, this is not somebody that's unsympathetic or unfamiliar with what we're doing.
I'm gonna play, probably overextending myself here, but I'm gonna pledge to work with Roy to try and come up with a list and share it, make it public, or try and gather it from Ritz Group members in terms, this is an opportunity. You need to help us by sounding off on what you think and you would do, or what you're aware of from other states. See if we can't get a really definitive plan, compiled, constructed, and then delivered, so that we can become a leader. Or more importantly, the funds that they have, we can use appropriately.
And again, I would challenge all of us collectively to say, okay, yes, we need to go and say we need to resurrect some sort of angel investment tax credit, and we think it should be structured in this way. That's one piece of what we need from them. Yeah, that's a big pot of money we want them to drop on our table for us. But separate from that, what are the kinds of things we want them to do, or to do in coordination with us, linking us up effectively with other parts of the state, linking us up with other states? You know, the things that a government can do better than any of us, because they have an unlimited amount of money and resources and everything like that. But yes, let's look at what investment tax credits or anything like that, that we want them to put back into the legislation. But separately, what are the other things that can benefit the angel investment community that we need to work with them, that they can help us with? So, you know, let's come up with some of those ideas as well.
I'll use this as a podcast to see if we can't get some press on it, and I'm going to put out some publicity on this, Roy, to our members to see if we can't get a consortium going or some help on this. Dara, I know you'll be proactive.
Yeah, I'll share as well. Definitely. Love to.
And everybody else in this phone call I know really well, and I know they'll share. Mills, I particularly need you because of the connection in South Georgia, and we all wanted to figure out. I think Mills has probably got the best handle on how to bring back South Georgia with this hemp, but also this can tie into how we can bring back the small towns in Georgia from an entrepreneurial ecosystem point of view. They can get started there just as well as they get started in Atlanta. So I'll take that on. Anybody else have a final comment before we end it? We're at the almost the 1:30 hour, but I got to thank everybody for participating, particularly Bill and Dara for a round two that I did capture. So I've done my job, and I will be posting it appropriately on our site.
Let me answer the question earlier. The chairman of the committee is Wes Cantrell.
Did you get that, Mills? Mills, did you get that?
Yeah, I got the name. What do you know? What city, town he's from?
I did, but not offhand. Augusta.
Augusta.
Oh no, wait, he was born in Augusta. No, it's not Augusta. It's somewhere else at this.
I'll look him up. Yeah.
One of the things that we're under some pressure also to do is to start meeting again physically. So that's another thing. If you can weigh in on that, I would appreciate it. I particularly like the virtual meetings based on content and capturing verbally when the record button is pressed. But there's nothing like pressing the flesh and seeing each other in person. So we're working on that.
So we have to go back to wearing pants?
No socks, but I've got pants. Anyway, right. Anything else for the good of the order that you'd like to say in passing that we failed to bring out here that you'd like to update? Mills, you okay?
It's another day in paradise.
Okay, well, just better hope we don't all move there. Okay. Hey, thanks, everybody. Really appreciate it, and I'll be talking to each of you individually. Thanks.
Thank you.
Yep.
Bye now.
Thank you.
Thank you.
Bye.